It may seem difficult at first, but everything is difficult at first. Miyamoto Musashi, my favorite samurai. Now let's jump into these charts. Everything down again for the day. We've had some down days this week, have we not? Of course, and it was a great day on Thursday when we closed out the S&P 500, successful in that down trade 4.06% using the wave technique. I'll have that at the end of today's video for you to look at over the weekend with some other great trainings. If you're not a subscriber, you don't get our trainings each and every day. Go to chartingwealth.com, sign up. Also subscribe to the YouTube channel. Give us a thumbs up. That's always appreciated. Patreon members, thank you for all the new members that have been signing up lately. Of course, we've been sending out to you as soon as we can, sending you the first package that you get, which of course includes 3-part series Options Made Simple, Charting Wealth Way. Let's watch and see where things have gone for the week. This has been fascinating. We jumped in on Friday morning. Yeah, that's right. I'm thinking about another trade I was engaged in. We jumped in on Friday afternoon of last week, and we got out Thursday. But of course, we saw things heading down. The STC went from green to red. That was our initiation of the trade. Things just continued to trundle down, and then we had that wacky morning on Thursday. Lots of up and down movement, as you can see from the wick on the top and the bottom of the candle, enough to clear us out when it touched it. That's why you always put in a good till canceled sell order as soon as you enter your trade. What do you put in your good till canceled sell order for? For, again, the amount that this little widget shows you when you do a 2-to-1 reward to risk ratio based upon your average true range. This figure right over here at the jumping in point. Why does average true range work so well? Because it's taking how it has been moving over the 14 prior periods. That's what the 14 here means. So it helps you actually adjust based upon most recent volatility. Doesn't that make sense? Well, it does make sense, and it works many, many times. Every single time. Is it a guarantee? Of course not. Anybody who's telling you that is lying to you. Nothing's guaranteed in the market. It is a dynamic marketplace with millions and millions of inputs. There is no way to possibly control it. If there were, then there would be no market. That's what makes it a marketplace. Okay, so we do know, of course, that the 2-day is still moving down. We have a red spinning top for the week. Again, showing some indecision there. Red on the STC. We go to the weekly, and again, we haven't penetrated with the candle, the 200 EMA. We have plumbed below it with the wick. So it doesn't mean, though, that for this weekly chart, we are in a negative downtrend. Not yet. Could be bouncing off. We'll wait, watch, and see. Now, going to the Qs, by the way, the S&P on Friday alone down 2.28%. NASDAQ 100 down just a little over 3% for the day. We also did the same thing on Thursday morning and cleared out our trade up and out at 4.76%, jumped in like the S&P back on last Friday afternoon, the 7th. And again, another good week for us. Very much the same kind of setup. 2-day looks very similar. Weekly, now this is important to note. We have a candle below the 200 EMA, and of course the entire candle body and the wick are below it. So we are definitely in negative territory. You might say, does that mean we're in bear territory, Tom? We've been in bear territory. What's bear territory? That is when you have 2 quarters of negative growth. Negative growth. Isn't that an interesting term? That's sort of like military intelligence for those of you who are in the military like me. Not a whole lot of intelligence. Bit of a misnomer there. But whoa, a build down, that's another great one. Build down, crazy. But when we look at what's going on in the market, of course, we know that we have been in a recession, regardless of what the lying politicians and their flunkies in the news media tell you. We can look at the market, we can read a chart, and we can see what's actually happening. That is why, my friends, I hope you're going to watch over the weekend. If you're not a Patreon member, you got it earlier in the week. Just put it out for the general public. If you have not viewed Charting Crypto and Commodities, I just put that out at the YouTube channel. I really encourage you to watch that. If you don't care about cryptos and all, just forward ahead a little bit, but go through the commodities charts with me and see what's actually going on in the world of gas, of oil, of natural gas, of wheat, of corn, of soybeans, of sugar, of coffee, of silver, all sorts of stuff. If you can read a chart, you don't have to worry about what the fear mongers are telling you in the news. You can actually see what's really going on. And if you know how to read a chart and know how and start practice trading these things, you can start practice trading those commodities, buying and selling just like the big boys. Again, this is not a game where you get out there and throw real money at this stuff when you don't know what you're doing. We're not a stock calling service. We're not a commodity advisory service. We're an education firm, but we want you to practice, want you to live, want you to learn. So we've closed out that trade. You might say, Thom, what are we going to do over this next week with the NASDAQ 100 and the S&P 500? We are going to just soak in those profits we had in our practice trades on the S&P and the NASDAQ 100. We're just going to pat ourselves on the back as we move into this next week. And of course, wait for something like this green STC to clear this center band and maybe re-trigger another down move for us. Look how the market moves in sort of herks and jerks, doesn't it? It moves all over the place. It moves down, then it might move up for a little while, then down again, then maybe up and sideways a little, and then drops again. That's why we use something like the STC and the candlesticks and this 200 EMA to help us see, are we going long or are we going short? When we're below the 200 EMA, we're going short. When we're above it, we're going long. And we use a success multiplier formula to help us understand how all the waves are going at the same time. If you've not taken that training on the success multiplier formula, that is another good one that I want you to take that I'm going to put at the end of today's video. And throughout the video, you'll see things pop up at the top of the screen that you might want to pay attention to over the weekend. Now, let's move from stocks, go to bonds. And of course, we had a successful bond trade down 2.83%. And we captured that also. Now, for those of you who are a bit naive, hadn't been with us for a while, you might wonder, Thom, you keep talking about making money when these things go down. What the hell are you talking about? Who buys something to lose money? They're inverse funds. The inverse fund for 20-year bonds is Tango Bravo Foxtrot, TBF. For the S&P 500, SH, Sierra Hotel. And for the NASDAQ 100, PSQ, Papa Sierra, Quebec. Now, you might be saying, wait a minute, what are these inverse funds all about? There's a whole lot going on there. And in fact, that's another training I'm going to give you guys. Again, it's on inverse funds, how to make money when markets crash, so you understand them. They're not as simple as just buying a regular ETF or a stock. They are managed. They are made up of derivatives. Their job is to track percentage for percentage the change in the underlying ETF. If it's the S&P 500 and the S&P 500 goes down 3%, the opposite of that, the inverse fund, is supposed to go up 3%. They're priced at different amounts, but the percentage change is supposed to be the opposite. So, again, higher fees, recalibrated on a daily basis many times. It is different. There are things you have to know about doing it, and losses can be very much magnified as opposed to just going the wrong way on a stock purchase. So you need to practice all this stuff because you're not going to understand any of it until you practice it several times and get it down. But we did great in bonds this week. We saw bonds slide sideways and then head on down in the morning on Friday, going a little bit lower than where we cleared out. That is fine, waiting for bonds to reset too. We look at bonds, of course, the 2-day still negative on the STC, as is the weekly. And of course, Bonds are so low. Look at that 200 EMA, how far down they are below that. Bonds have been sucking wind for a while. They had several weeks of up movement until that stopped at the beginning of August, and all you see is red candles going down. And of course, we've had a couple of good trades off those red down candles. Now, let's move on to gold. Where is gold? Gold, we'll start with the weekly. You can see where gold is. It is below the 200 EMA on the weekly chart. You hear people telling you ought to be buying gold. I don't know. What do you think? This looks like you ought to be buying gold over the last many weeks. Maybe it's bottoming out, but it was down 1.25%. I don't like to buy things and see them lose money. Now, we look at where we are on our negative trade on gold, and there isn't really a good inverse fund in gold. This is where you need to have that training that we teach our Patreon members on options made simple, the charting wealth way, because if you want to go short on gold, my only way to do it, maybe somebody's figured out another way, but we go the options route. You get into some puts. You want to practice trade those. So what do we see going on? Well, we almost got cleared out of gold in the afternoon, didn't quite hit the bottom. What are we trying to make on this? Well, in the aggregate, 2.34% is what we are hoping it will drop to. And of course, if you look into this little widget that we use here, you can see what the profit level is. We want it to go down to 152.53. That's what we hope it will drop to in order to garner our profit. And of course, you use that number to help you with the Delta and the Greeks. Great training at the website, at the Patreon page for our Patreon members. If you're going there to the past trainings, there's 2 articles on the Greeks. You can read those. It'll help you very much understand how to use these numbers that you'll see in the widget to help you figure out what to set your good till canceled sell order and how much you can hope to make on your option and where to realistically set that so that you can cash out at the appropriate point with the appropriate amount of profit in your practice trade. Again, it takes practice, it takes experience, but you can do this. This isn't rocket science. As I say, this is charting art. So, haven't yet cleared this final of the 4 trades over the last couple of weeks, but we're hoping as the new week starts, it will work. The only caveat we have here is, of course, the 2-day chart is still green on the STC. That was giving us some pause for concern here. Looking pretty good, though, with this latest strong down candle. Again, getting awfully close to closing this trade out. We'll see how things go on Monday. Of course, if gold starts to spike, then we may pull the plug on this one early. But so far, so good. Now, what about, we'll move on to Bitcoin. This is XBTF. This is the Bitcoin chart that, of course, you can find, again, in the regular marketplace. It is an ETF. It is a short-term closed month futures chart on Bitcoin. And again, we like it because you don't have to go to one of those pesky crypto exchanges that might have financial problems, particularly if Bitcoin plunges more in the future. This is something you can do right there in the regular marketplace. So it gives you options. The inverse of this is BITI. Now again, not found a whole lot of success trying to chart Bitcoin lately. Why? Well, it's been sort of hanging out on these lows, a lot of sideways slippage, and just not giving us the kind of reliability we want. What do we need for our indicators to work the best? We need things to be moving, not simply to be range-bound, sliding sideways, and not catching fire up or down. Why? Because, of course, we're using the STC, which is a combination of stochastics and the moving average convergence divergence indicator, the MACD. So for those to work, we actually, particularly the MACD, we actually need things to be moving. And when they're not, when they're languishing like Bitcoin has been doing, It just isn't doing that much for us, but that's okay. We're waiting for Bitcoin to move. We look at where it is on the 2-day. Again, you can see where it's hitting about these same kind of lows. In fact, this latest wick actually plumbed lower than we have seen over the past several months. That's not necessarily a good sign. Didn't close there. We look at where the weekly is. We can see we've been around that 1820 mark or so, but we can tell this last week we actually went all the way down to 1779. Now, Bitcoin does range around a lot, but we don't want to see that just continuing for it to sink further. I still am hoping that we might be building some kind of base from which to launch the recovery of Bitcoin. But don't think there's really been capitulation at this point. So we'll see. We'll wait, watch, and see. Folks, thank you so much for all your support. We do love to hear from you. Don't hesitate to reach out to us, cw@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.